Hello, I'm Ryan Lightfoot Aminoff of Fund Caliber, and today I'm joined by Randy Dishman, manager of the Invesco Global Focus Funds, which is on Fund Caliber's Elite Radar. Randy, thank you very much for your time today.
Thanks for having me.
Now, you took over the running of this fund in February 2020, which is coming up to a couple of years ago now. What's the last 2 years been like running the strategy, especially everything that's been going on in the world?
I think running this strategy has been similar to what I've been doing for the last 20 years. The backdrop, of course, has been a bit surreal, and watching how much basic mobility or the lack of basic mobility has affected the economy has been very interesting. But the world is almost always very rich in opportunity if you can find it. And so it's been a good 2 years. They've been very different years, but I've enjoyed running it so far and finding the opportunities that are out there.
And you run quite a concentrated fund, hence the sort of focus name. How do you go from that huge global universe that you can pick from just to the 30 or 40 stocks that you have in your portfolio?
Yeah, well, this is a question I've gotten many, many times over the years. And what I try to get people to understand is it's not a boiling the ocean kind of exercise where you analyze 67,000 public companies. I think by the time if you think about what the market is composed of, by the time you throw things out that are either too small or in places where you wouldn't want to send your kids, or in places where a return of your capital is unlikely, or where there is a poorly functioning legal system, poorly functioning markets, you get down to 8,000, 9,000 companies fairly quickly. And then from there, I'm looking for very specific things. I'm looking for advantage. Not every company is advantaged, and I can identify it fairly quickly at this point in my career. Over the past 20 years, I've done detailed analytical work on at least 3,000 or 4,000 of the companies that are in that 8 or 9. And I don't lack for ideas. I've never had a moment in my career where I was lacking ideas.
Well, thank you. And so let's perhaps look at a few of those holdings that you've got. Facebook, a well-known name, it's in your top 10, almost 10% of your portfolio. So why do you like it? And what are your thoughts on the company's name change to Meta?
I think part of learning how to invest money and being a good investor is learning to recognize the signs of advantage. Certainly one of those signs, and this is something that I asked all the analysts in my group to do, is make a list for me of everything you can think of that has 2 billion daily users. It's interesting because you start talking about things like food, clothing. I'm not even sure. I can't find hard data, but I don't think the automobile would be on the list of things that have 2 billion daily users. Facebook is on that list. And so learning to recognize whether you see the signs of advantage or not, when something hits the tuning fork of 2 billion people in the world so that they use it daily, there's something special going on there, and you probably need to get in and understand it. So I've been looking at Facebook for years now. I can honestly say, for the past 5 years at least, I've never seen a company with Facebook's economics. It might be the best economic model I've seen in my career. It's also extremely rare to see a company at that scale continuing to grow in double digits, well into 20, 30% growth. It's an amazing company. It's an amazing economic model, and it's very early in its development. It's got a long way to go. You mentioned the name change. To me, the name change feels premature, but I think they're trying to send you a signal that they take this idea of the metaverse quite seriously, and they're going to be a key player in making that happen. I'm more skeptical of what that actually means commercially for today. I think it's probably more 5 to 7 years out, but let's see.
And you've also got a cybersecurity company, Crowdstrike. Is that the result of the changes we've seen in the last couple of years, the increase in working from home and the big increase in online transactions? Or is it just a general theme that you're picking up on?
Well, it's interesting. It was accelerated by people staying home and more of a hybrid work environment. But it's really an extension of the structural move to the cloud that started in earnest probably 6-7 years ago, very slowly, and then started gaining steam. By 2016, 2017, and on through 2018, the move to the cloud was growing quite rapidly because it's a better architecture model for computer systems. It's for computer networks. The interesting thing about the move to the cloud is it will change the winners, because if you're a 50-year-old security engineer, your entire career has been built around building a firewall around your network and guarding that firewall like it is everything that's valuable. You connect everything physically to the firewall. You have all the same devices, the company issued device. You don't bring outside devices that connect to the network. But in the new security paradigm and in the new cloud architecture, you bring everything. You bring an iPad, an iPhone, a personal laptop, a company issued desktop. You connect from 20 different countries. You don't connect all from the 11th floor right above your data center down on 10. And so, the old way of build a solid firewall and connect everything to it and then watch it is irrelevant. There is no network perimeter anymore. And so you needed new ways to secure a network with that sort of architecture. And CrowdStrike has that solution. There's one other player with a key part of it, but CrowdStrike is going to be relevant for a long, long time.
Really interesting. Thank you. And now finally, you've mentioned the terms structural trends a few times. So other than the ones already mentioned, what are some of the other key trends that you're looking at? And do you have maybe a couple of examples of companies that are benefiting from these trends?
Sure. Again, one of the things you do as an investor is you look at how the world is changing, and you try to get, in the way of the good change. You definitely want to be on the right side of change, because being on the wrong side of change can be quite ugly. Think about all the cell phone companies that didn't innovate and wound up in the waste bin of history. Structural trends don't mean revert. The economy might go into a recession, it might boom, it might do all kinds of different things, but e-commerce continues to grow. The Fed may raise rates. That won't stop. It's not like people will say, enough of e-commerce, I'm going back to the store now. And so structural trends have benefits because they're backdrop irrelevant, really. And that's part of why I look at structural trends. But one of the things I just mentioned was e-commerce. We've all been standing by watching our own behavior trend more toward e-commerce over the last 20 years. It continues to take share of basket. It continues to offer things that you might not have anticipated 5 years ago. The idea that you would be buying groceries from Amazon was probably not on people's radar screen even 5 years ago. And now I think it's quite common and it's growing rapidly. Prescriptions, buying online prescriptions that get sent to you in the same order where you might buy, music or you might buy clothes. It's, the world has been very dynamic in how it's adopted e-commerce and the benefits e-commerce continues to bring to us. The electronification of money is something that's been going on for 70 years. People didn't think of credit cards as the electronification of money. But when you look at social attitudes and how they've changed, when credit cards first came out, they were only for the wealthy and they were only used for large purchases. And even when I was, coming out of college, I could get a credit card, but they were still only for large purchases. Now, people think nothing of carrying no cash, carrying a credit card, and it's anyone I know would walk into a convenience store and buy a bag of potato chips and a bottle of water on a credit card. You wouldn't do that 15 years ago. And so, now with the ability to pay online with things like PayPal and with some of the other digital, payment companies, the electronification of money continues apace. It's about 50 to 60% of all transactions in the United States are digital. And, that's going to continue growing.
Well, Randy, as expected, that's been absolutely fascinating. Thank you very much for your time today.
Thanks for having me.
And if you'd like to know more about the Invesco Global Focus Funds, please visit our website, fundcaliber.com. And for more from our video series, please don't forget to like and subscribe below.